Delores Hartigan opened an envelope at her kitchen table in Peoria, Illinois, and had to sit down. She was 74 years old. She had lived in that house for 31 years. She had paid it off in 2009, and she remembered exactly how that felt, because she and her husband Bill drank cheap champagne out of coffee mugs that night. Bill died in 2021, and on that morning, the envelope in Dolores's hand said she owed $3,416 in property tax on a house she already owned. Free and clear. Nobody's mortgage. Her house, her Social Security check, was $1,480 a month. So here is what Delores did. She paid it. She paid it out of the money she had set aside for a new furnace. And she went another winter with the old one. And she wore a sweater in her own living room. What Delores did not know is that in her county there were 4 separate property tax programs she qualified for. 4. Stacked together, they would have taken that $3,400 bill down to almost nothing. She had qualified for 3 of them for 9 years. 9 years. And nobody sent her a letter. Because that is not how this works. In almost every county in America, property tax relief for seniors is not automatic. You have to ask. And if you never ask, they never give it. And they never tell you that you could have. $3,400 a year is the average property tax bill in this country. Over 20 years. And property tax bills go up, they do not go down. That is well past $90,000. $90,000 out of a fixed income on a house you already own. And the reason most seniors pay it is not that they do not qualify. It is that nobody ever told them these programs existed. Now, I am going to walk you through 4 of them today. And I am saving the biggest one for last, the 4th one, the one almost no senior in America knows about, is the one where the state pays your property tax bill for you. Not a discount, not a credit. The state writes the check to the county and you pay nothing for the rest of your life. In that house. That is real. It is on the books. And I will explain exactly how it works and what the catch is, because there is one, and I am not going to hide it from you. Here is how this is going to go. 4 programs. For each one, I will tell you what it is in plain English, what it is worth in dollars, who qualifies, and then the exact words to say when you pick up the phone. Because the phone call is where most people lose this, by asking the wrong office the wrong question. My name is Ellis Grant. I am not a lawyer. I do not work for the county, and I do not make a dime whether you claim any of this or not. I read the rules, so you do not have to, and then I tell you in plain words what they actually say. And before we start, I need you to hear this part, because this is where I lose people. I do not care if you are sure you make too much money. I do not care if you tried once, years ago, and got told no. I do not care if you think your house is too nice, or your income is too high, or that these things are only for people who are truly poor. Every single one of those beliefs is the reason seniors do not claim this money. The income limits on these programs are far higher than you think. In some states, they are over $65,000 a year, and in a few, there is no income limit at all. And I tried once almost always means you called the wrong office and asked a question that had a technically correct no for an answer. So stay with me. Do not disqualify yourself. That is the county's job, and honestly, they are not very good at it either. Let me answer the question you are already asking, because if I do not answer it, you will not believe the rest. If I qualified for 9 years, why did nobody tell me? Here is the honest answer. And it is not a conspiracy. It is worse than a conspiracy, because a conspiracy at least requires somebody to be paying attention. Property tax is run by your county. Over 3,000 of them in America, each with its own assessor's office, its own forms and its own deadlines. And nobody at the county has a job title called Make Sure Seniors Get Their Exemptions. The assessor's job is to value your house. The treasurer's job is to collect. Neither is paid to reduce your bill, and neither has a list of every 70-year-old in the county with a note that says, "Call her." Here is the part that stings. In most counties, when you turn 65, nothing happens. No letter arrives. Your bill just keeps coming, at the full amount, exactly as it did when you were 55 and working. The system is not designed to cheat you. It is designed to respond. You knock, it opens. You do not knock, it sits there. So let us go knock. The first one is the foundation. It is called the Senior Homestead Exemption, or the Over 65 Exemption, or the Elderly Exemption, depending on your state. Same idea, different name. Here is what it is, in one sentence. It takes a chunk of your home's value off the books before they calculate your tax. So if your house is assessed at $200,000 and your county gives seniors a $50,000 homestead exemption, the county taxes you as though your house were worth $150,000. You still own a $200,000 house. You just get taxed on less of it. What is it worth? It varies by state, and I would rather be honest about that than give you one number that is wrong everywhere. In most places, it runs between $400 and $1,100 a year. In Texas, the over 65 school tax exemption alone is worth well over $1,000 for most homeowners. In Florida, the additional senior exemption stacks on top of the regular one. In Georgia, some counties exempt seniors from the entire school portion of the bill, which is often more than half of it. Who qualifies? Almost always 3 things. You are 65 or older. In some states, 62. You own the home, and it is your primary residence where you actually live. Now let me smash the self-exclusion, because this is the one people talk themselves out of. Many states have no income limit at all on the basic senior homestead exemption. None. It does not matter what your pension is or what is in your retirement account. If you are 65, you own it, and you live there, you qualify. In the states that do have a limit, it is usually generous. $35, $40, $65,000, and often counts only certain kinds of income. And second, you almost certainly already have a regular homestead exemption from when you bought the house. People assume the senior one comes automatically on top of it. It does not. It is a separate application. Chester Ripley is 71, in Grand Island, Nebraska. He was pretty sure he had all his exemptions because he filled out a homestead form back in 1998. He had the regular one. He had never applied for the senior one, because in 1998 he was 43 and it did not apply to him, and nothing ever reminded him. He filed the new form. His bill dropped $680 for the year for 20 minutes of paperwork. Here is how you claim it. And here are the exact words. You are calling the county assessor's office, not the treasurer. The assessor decides what your house is worth and what exemptions apply to it. The treasurer just takes the money. Call them, and they will politely tell you your balance and mention none of this. When they answer, say this: I am 65 or older, and I own and live in my home. I am calling to apply for every property tax exemption available to homeowners over 65. Can you tell me which ones I qualify for, what the income limits are, and what the filing deadline is? Say it exactly like that. 2 reasons. First, every exemption available makes them read you the list instead of answering one narrow question. Second, asking for the deadline in the same breath tells you immediately whether you need to move this week or whether you have months. And then ask one more thing, which most people never ask. Can any of these be applied retroactively? And does this county allow a late filing for seniors? Some states let you go back. Some let you file late with a good reason. Some do not. But nobody will offer it if you do not ask. I need to stop for a minute, because when seniors start looking into property tax relief, something starts showing up in their mailbox. You will get an envelope. It will look official. It may have an eagle on it, or a seal, or a return address with words like Homestead Exemption Filing Service or Property Tax Assessment Review Board. It will say you may be eligible for a reduction, and that for a fee, usually between $50 and $500, they will file the paperwork for you. Some will offer to take a percentage of your savings instead, 30 or 40% of what you save. For years, here is what you need to know. Every form I am talking about today is free. The application is usually 1 page. Your county assessor will help you fill it out for free if you call and ask, and in many counties they will mail it to you or take it over the phone. Nobody needs to be paid to file a free 1-page form on your behalf. If a letter arrives that looks like the county but asks for money, look for the words, "This is not a government agency," which they are usually required to print somewhere in the smallest type on the page. Then call your assessor directly, using the number you look up yourself, not the number on the letter. The programs are real. The people mailing you about them very often are not. Now we get to the one that matters most. If you have lived in your house a long time. The senior assessment freeze does exactly what it sounds like. It locks the assessed value of your home at whatever it was the year you qualified. Your house can go up in value every year after that, and the county can keep saying it is worth more, but for tax purposes it is frozen. Here is why that matters right now in a way it did not 20 years ago. Home values went up enormously over the last several years. That is wonderful if you are selling. It is terrible if you are 78 and staying. The county reassesses your house, decides it is worth 40% more, and sends you a bill that reflects it, even though you did not get any richer. You cannot eat your house. You cannot spend your kitchen, but you are taxed as though you can. Meanwhile, your Social Security went up 2 or 3%. That gap is why seniors lose houses they own outright, not to a mortgage, to a tax bill. What is the freeze worth? It starts small and grows every year. In year 1, it might save you nothing. By year 5, it is commonly $600 to $1,000 a year. By year 15, in a market that has run up, it can be several thousand. It is the most valuable thing on this list for someone who plans to stay put, and it is worth more the longer you live. Who qualifies? 65 or older. Own it, live in it, and this one usually does have an income limit. Illinois has the Senior Citizens Assessment Freeze Homestead Exemption with a ceiling in the mid-60,000s. Texas has a school tax ceiling for homeowners over 65 that works the same way. New Jersey runs a senior freeze reimbursement program. Many other states have their own version. And now the self-exclusion, because this one is brutal. People hear income limit and hang up. Listen carefully. On most of these programs, the income they count is not the number on the top of your tax return. Many states exclude part or all of your Social Security. Some exclude certain pension income. Some let you subtract medical expenses first. The number they use is frequently thousands of dollars below the number you think of as your income. You do not know if you are over the limit. The assessor knows. Make them tell you no. Do not do it for them. Yvonne Castellanos is 77, in Mesa, Arizona, in the house she and her late husband bought in 1984. She assumed she made too much, because between her Social Security and his small pension she was over $40,000, which she had heard somewhere was the cutoff. When she finally called, she found that the way her state counted it, she was under, comfortably. The freeze was applied. 2 years later, when valuations in her neighborhood jumped again, her bill did not move a dollar. Her neighbors went up $900. Does this county or state have a senior assessment freeze or a valuation protection option for homeowners over 65? If there is an income limit, can you tell me exactly which types of income count toward it and whether Social Security is included? That last part is the whole call. Which types of income count? Ask it every time. The third one has the strangest name on this list, and it is the one people most often assume does not apply to them. It is called a circuit breaker. The idea comes from your electrical panel. When the load gets too high, something trips and shuts it off. A property tax circuit breaker does that with your tax bill. When your property tax rises above a certain percentage of your income, the state steps in and gives you money back. Around 30 states have one, under various names: property tax credit, homeowners tax credit, property tax refund, tax relief credit. It is usually worth between $200 and $1,400 a year. Missouri's runs up to $1,100. Michigan's Homestead property tax credit runs higher. Maryland's can be worth well over $1,000. Now, here is the part that makes this one different, and I want you to listen even if you think this section is not for you. In a number of states, the circuit breaker is available to renters. Renters. People who do not own a home at all. The logic is that your landlord's property tax is baked into your rent, so a portion of what you pay every month is property tax. Several states let you claim a percentage of your annual rent as property tax paid and run it through the same credit. So if you are 73 and you rent an apartment and you have been sitting there thinking none of this has anything to do with you, this one might. The other thing about the circuit breaker is where you claim it. Usually not the assessor. In most states, it comes through your state income tax return or a separate form filed with the Department of Revenue. And that trips up an enormous number of seniors for one reason. Many seniors do not file a tax return at all because their income is low enough that they are not required to. So they never file. So they never claim it. So the state keeps money that was set aside for them because it lives on a form they were told they did not need. If your state's circuit breaker runs through the return, you may need to file one you are not otherwise required to file, purely to claim the credit. That is not a loophole. That is how the program is designed. Ray Buckhalter is 79 and rents a small place in Athens, Georgia. He had not filed a return in 11 years, no reason to, and nobody suggested it. His niece found the credit, filed the form, and he got a check. Then she went back and filed for the prior years the state allowed, and he got those too. He used the first check to fix his car. The exact words, "and this call goes to your State Department of Revenue," not the county. Does this state have a property tax credit or circuit breaker program for people over 65? Is it claimed on the state income tax return or on a separate form? What is the form number? Am I eligible if I rent instead of own? And how many prior years can I still file for? That last question is worth real money. Many states allow you to go back 1, 2, 3 years. Ask it. All right, this is the one I told you about at the start. And it is the biggest, and it is the one almost nobody knows. It is called property tax deferral. Here is what it is. In a number of states, Oregon, Texas, Washington, Colorado, and others, a homeowner over a certain age can file a form that says, "I am not going to pay my property tax anymore." And that is legal. And nothing bad happens. In the state-run programs, the state pays your bill to the county on your behalf every year for as long as you live in that home. In the ones structured as a simple deferral, like the Texas over 65 deferral affidavit, the bill just goes unpaid and the county cannot foreclose on you for it, not while you live there. Your bill goes to zero, out of pocket, zero, every year for the rest of your life in that house. Now the catch, and I promised I would not hide it. The money is not forgiven. It is a lien. The unpaid tax, plus interest, usually a low rate, but not zero, accumulates against your house. When you sell, or when you pass away, and the house is sold or transferred, that amount is paid back out of the proceeds. So this is a real trade. You are trading some of your children's inheritance for the ability to stay in your home and eat right now. And I want to say one thing about that, carefully, because it is not my decision to make. I have watched seniors go without heat, skip prescriptions, and sell the car to protect an inheritance for children who, if you asked them, would say without hesitating, "Mum, pay the tax with the house." That is what it is for. If you are in that position and you have not had that conversation with your family, have it. Not with me. With them. You may find it was decided years ago and nobody said it out loud. Who qualifies? It varies. Oregon's senior and disabled property tax deferral has an age requirement, an income limit, and a requirement that you have owned and lived in the home for a period of years. Texas's over 65 deferral has essentially no income test. If you are 65 and it is your homestead, you can file the affidavit. Washington and Colorado run their own versions. Winston Fry is 82, in Bend, Oregon. His property tax was running about $4,000 a year and had become the largest single thing in his budget by a wide margin. He filed for the state deferral program. The state now pays his county bill. He told his 2 sons before he did it. He showed them the paperwork and the interest rate and asked them straight out. Both of them told him the same thing. "Do it and stop calling us about it." The exact words. This call goes to your state's Department of Revenue and sometimes to the county assessor, and the person answering may not know the answer immediately, which is normal. Does this state have a property tax deferral program for homeowners over 65? What is the age and income requirement? What interest rate accrues on the deferred amount? And does a deferral prevent foreclosure for unpaid property tax while I live in the home? Then, before you file anything, get the interest rate in writing and tell your family. Both of those. Every time. Assessed values across most of this country went up sharply after the housing run-up, and counties have been catching up on reassessments ever since. A great many seniors are right now holding a bill meaningfully bigger than the one they got a few years ago. Same house, same roof, same income, Meanwhile, cost of living adjustments have been a few percent. That gap has widened fastest for the people who have owned their homes the longest. And here is the operational piece that costs the most money. These are annual programs with annual deadlines. Many counties want the application in the spring, March or April, sometimes as early as the 1st of March. Miss it, and in most places you do not get a second chance until next year's cycle. Not next month, next year. So the cost of waiting is not zero. It is 1 full year of the benefit, every time. Let us put it together. The average American property tax bill runs right around $3,400 a year. In higher tax states, it is considerably more. The senior homestead exemption takes a piece off the top. The assessment freeze stops the bill from growing past you. The circuit breaker sends money back when the bill is too big for your income. And the deferral, if you choose it and your family agrees, takes whatever is left and drops your out-of-pocket cost to zero. Not every state has all four. Almost every state has at least two. Stacked on a typical bill, this is the difference between paying $3,400 a year and paying a few hundred, or nothing. And it repeats, every year. Property tax does not go away and it does not go down on its own, so every year you do not claim these, the number gets a little bigger. Over 20 years, on a bill that rises the way these bills rise, you are looking at well past $90,000. $90,000. On a house you already own. I want to come back to Delores Hartigan because I do not want to leave you with just numbers. She did eventually make the call, a year and a half after that furnace winter, after her daughter sat down, dialed the assessor's office, and handed her the phone. She qualified for the senior homestead exemption. She qualified for the assessment freeze and had qualified for 9 years. She qualified for her state's circuit breaker credit, which she claimed on a tax return she was not required to file. She chose not to do the deferral because she wanted the house to go to her daughter clean. Her decision, and the right one for her. Her bill went from $3,416 to under $900. She got the furnace. She did not get the 9 years back. Nobody does. That is the part I cannot fix, and it is the reason I make these videos. Because the only thing separating the seniors who get this money from the ones who do not is that somebody, at some point, told them it existed. Nobody is going to call you. The county is not going to notice you turned 65. And the state is not going to mail you a check for a program you never applied to. Here is your action step, and it is 1 phone call. Look up your county assessor's office, search the name of your county, plus the word assessor, and use the number on the official county website, not one from a letter in the mail. Call them and say, I am 65 or older, and I own and live in my home. I own in my home. I'm Arthur Pridinad. I am calling to apply for every property tax exemption available to homeowners over 65. Can you tell me which ones I qualify for, what the income limits are, and what the filing deadline is? Have a pen. Write down the deadline. Ask whether they can mail the forms or take it over the phone. And when they mention an income limit, ask which types of income count and whether Social Security is included. That is it. 1 call, 20 minutes, and it repeats every year for the rest of your life. A quick word on what I am not. I am not a lawyer, I am not a tax preparer, and I do not work for your county or your state. These programs vary enormously by state and by county, and the only office that can tell you what you qualify for is yours. What I can do is tell you they exist and what to ask for, because that is the part nobody else is doing. If this was useful, share it with someone you love who is over 65, especially someone who owns their home and lives alone, because those are exactly the people this money was set aside for, and exactly the people nobody ever calls. I am Ellis Grant. Go make the call.